ever since we featured this, what was it, like 6 months ago, I've been trading this on and off. And so what I wanted to, this is one of my nice ones. A lot of folks were following us and they went ahead and shorted some Ruth Steakhouse stock shares at $19. And now this is the time we got our signal. This is the time to be selling that premium. Let's take a look at what we could get for selling some premium. So, when we sell, when we see a pattern like this, we want to identify what are the boundaries of this sideways channel. In other words, what's support and resistance? And I want to clarify and I want to emphasize that I'm using the word identify, because you can't define support and resistance. The pattern defines it. We just have to be kind of like a detective and determine what it is. Like for here, I've got it identified at 16.5 and $19 respectively, right? But then when we set up our trade, we get to define where we put those boundaries. I hope that makes sense for folks, because we can define, using a boundary outside of the channel zone. What that means, of course, is that it's going to be moving in the channel zone. We're never going to get outside of our trade zone. And so this position is going to provide income for us, right? Or we can make the decision to instead tighten up that trade zone inside the channel zone and fully take on the possibility that we would get knocked out of the position. If we venture out of the trade zone, it means that either our protective option or our sold option is going to kick in, but you're guaranteeing higher profits up front. So you get to choose, after you've defined the pattern, defined and identified where that pattern is, you can choose whether you want to take profits up front or if you want a position that's more for the long term. So right now, we get a chance to define what our trade zone is going to be. I almost am recommending, because I know that this particular symbol trades on $2.50 strikes. So $17.50, $15, $20. I almost feel like we should define our trade zone between the $17.50 and $20 zone. So what does that mean? It means coming over to our option chain, and we'll use a July 15 option. We're going to basically sell our put. And so we'll sell our put. Looks like we could get about $1.15 if we sold it right this minute. And then maybe not August. Maybe for my protective option, I'll go all the way out to November. And this is where I'm going to be buying my $20 option. It's going for about $1.65. So yeah, I'm going to be putting up an additional 50 cents. But I know that by buying this $1.65 option, that before I know it, this $1.65 option is going to be worth more like $3.50 or $5.70. And that's what I'm going to be doing. I'm going to be rolling out my protective option as I move towards the top of this channel. So that's what I would do. I would be buying the $20 call, probably out in the November expiration, and I'd be shorting or selling or writing. Those are all synonyms for each other in this instance, the $17.50 put. And that's exactly what I would be doing right now. This is when we define this trade zone, and this is where I'd go.
And let me ask you a question. So because of the spread, right, you're collecting the premium, but you're also paying, am I safe to assume that my investment is that 50 cents, which would be the equivalent of like $500?
Well, so yes. So the cool thing is the this thing that you're buying for 50 cents is actually worth right now something like $1.15. Let's make sure I got those numbers right. If I come back over here, you're getting a discount by it's worth $1.65. I said $1.15. What I meant to say was $1.65. So you're only paying 50 cents for something that's worth $1.65, because all that extra money, the $1.15, is going to wind up decaying with time, and so you're going to get to keep that money. So the put that you're buying at a deep discount, or not the put, the protective call that you're buying at this deep discount is only going to go up from here. In fact, we target that by the time we get rid of that protective option, when we don't need it anymore, it's going to be worth about $3.50. So if you bought it for $1.65, selling it at $3.50 is awesome. But if you buy it at 50 cents because you get that discount and you sell it for $3.50, I mean, you're talking about not only making 100% on your money, or 200 or 300, you're making like 450% or 400 500% on your money by buying this for 50 cents and selling it for 3.50. That's our target.